What's up YouTube, JD here, back with yet another video for you guys. We are going to be doing something very different on the channel today. We are going to be talking about investing, and no, I don't just mean sneaker investing, although that is part of it. I'm going to be talking about all the other different things I invest in, how much I invest in them, and why I invest in them. So about a month ago, I asked you guys on my Instagram what kind of videos would you guys like to see more of on the channel. And to my surprise, one of the most requested topics was about investing, specifically stock market investing. And I've wanted to talk about this topic for quite a while, but I just wasn't sure whether I should talk about it on this channel or make a separate channel for that. But I thought, you know what? I might as well try it. I will do a video on this channel, and you guys let me know down in the comments if you found this video useful. That would be amazing. Also, let me know down in the comments whether you would prefer a separate channel for these types of videos or if I can just keep dropping it on my main channel. But I'm very excited to talk about this because this is something I'm really passionate about. And I know a lot of you guys are not only sneakerheads, you guys, buy and sell sneakers as part of investing. So I do truly believe that this type of video would be valuable for you guys. So before I even get into what I'm actually investing and how much I'm investing, I first want to talk about why right now is one of the most important times in history to be investing your money. I don't know if you guys have been reading this in the news or not, but the governments across the world are printing money like there's no tomorrow. So in the past, when the government wanted to, boost up the economy, avoid a recession, what they used to do was they would lower interest rates. But now interest rates are already at zero. They cannot lower it anymore. So what they do is they pretty much just print money. And in some countries, you guys might have seen that. You guys might have gotten a stimulus check from the government. I know in the United States, they have been doing that. But all of that comes with a cost, because every time a government keeps printing more and more money and increasing the money supply, what you do is you devalue the currency. And because most likely governments are going to continue printing money, we're going to keep seeing, in my opinion, some of this currency devaluation. So that is why you really don't want to be holding cash right now. So those are some of the reasons why right now is a very important time to invest. I'm now going to talk about what I'm actually investing in. But before I do that, I want to say that this is just me. This is what I invest in. I'm not saying it's the best way to invest. I'm not even saying it's the way you should be investing. This is how I do it. Before I even tell you about how to invest though, the number one piece of advice I can give you guys is first, pay off your debt. If you have like credit card debt with like 20% interest, then there's literally no better investment you can make right now than paying that off. If you have any kind of debt with a high interest rate, and I would say anything right now over 3% is a pretty high interest rate, I definitely 1000% suggest paying that off first before you start investing money. All right, so let's get into what I'm doing with my money. So first of all, let's talk about high interest savings accounts. Now, I know I just said that right now holding cash is like the worst thing possible, but with that being said, it is super important to have an emergency fund, because you just never know. Anything could happen. You could lose your job, somebody could get sick, your car might break down, you might have to buy a new car. You just never know. So I think it's super important to have an emergency fund. And if you are gonna have some cash savings, it is very important that you should be investing in a high interest savings account. And right now that would be anything 1% or higher would be considered a high interest savings account. So in your specific country, look for the banks that are offering that type of interest and make sure that you invest in there. So I'm investing in a high interest savings account in Canada that's currently offering me 2% of interest. So that to me is pretty good. So that's also part of the reason why I feel okay keeping 25% of my money in a 2% interest savings account. The next thing I invest in is index funds. Now, for some of you guys, you might have never heard of this. So let me tell you what an index fund is. As you guys know, the stock market has tons of different stocks in there. The S&P 500, for example, is made up of 500 different stocks. And basically, instead of buying 500 different stocks in your portfolio, what you can do is simply buy an index fund. So it's super simple. You buy this one fund and you get to invest in 500 companies all at once. There's all kinds of evidence out there that shows that just investing in index funds is a much better option than trying to pick individual stocks. Especially if you're someone who's new to investing, I really recommend this is the way you should be going. If you're someone who's new to investing, I would suggest putting up to 60% of your investing money into just index funds. By doing that, you're very well diversified. You don't have to worry about a company going bankrupt because you have 400 other companies that can make up for it. Even the greatest investor of all time, Warren Buffett himself, has said that most people right now, you guys should just be investing in index funds. And the best way to do that, in my opinion, is to do it regularly. So let's say, for example, you know that every month you want to put $200 into the stock market. Don't worry about whether the stock market is up or down. Just know that every month, just put 200 in there, just buy it consistently, whether it's up, whether it's down, it doesn't matter. Over time, this method of investing has proven to outperform even some of the big hedge fund managers out there. I personally invest 30% of my money in index funds. That is lower than what I suggested, but I have been investing in stocks now for over 10 years, so I kind of have more experience there. So that is why this is a bit lower for me. But for anyone new to investing, you should be having a much higher percentage of your money, I believe, in index funds. I would say up to 60%. Some of the companies out there that have index funds are Vanguard. There's also, I believe, Charles Schwab in the US. And these companies charge very, very small fees to manage these funds. I'm talking like 0.04%, meaning if you invest $1,000 into the fund, you only got to pay $4 basically in fees. The next is individual stocks. Now, when it comes to individual stocks, it's extremely important you do your research on every single company you invest in. I could make videos talking about how I personally research stocks and even tell you some of the stocks that I own in my own portfolio. Let me know down in the comments if you guys want to see that. So the thing about investing in individual stocks is that it does come with a lot of risk. With individual stocks, there's obviously the potential to make a lot of money. If you bought Amazon or Tesla this year, for example, you're definitely smiling right now. But if you bought airline stocks or cruise ships, you would have never predicted like a pandemic was going to come and absolutely decimate the industry. So you're definitely down a lot of money in those stocks. So that is why for most new investors, I don't suggest trying to just pick out individual stocks. You're definitely much better off consistently buying index funds. But I know that's really boring. It's of course a lot more fun to invest in individual stocks. And if you are going to do that, it's really important you think about what types of companies are going to succeed in this type of environment we're in right now. For example, right now, I am not buying any stocks that have anything to do with consumer goods. Like Nike, for example. I don't want to be buying Nike stock right now. Nike actually just said that last quarter, they had a $700 million loss. Nike makes most of their money from sales at the store level. And right now there's just a lot of lockdowns in the world and people are just not that willing to go outside and spend money. And also we are in a big recession. 45 million people in America have lost their jobs. So I don't think that consumer goods, things like shoes, bags, stuff that you don't really need, I don't think that these kind of companies are good to be investing in right now. When it comes to individual stocks, I also do about 30% of all my money right now is in individual companies. The next on the list is real estate. So you guys know what that is. You buy a property, you hope it goes up over time, and then you cash out. Now, up until last year, this was the asset class that I invested most of my money in. In fact, about 80% of my money was in real estate last year. But right now I don't own any properties, and a lot of that has to do with the fact that I'm just kind of unsure about real estate in general right now. Because of this pandemic, a lot of companies are asking their employees to work from home, not come to the office anymore. In fact, Facebook has told all their employees that they won't need to come to the office for the rest of the year. So when I see something like that, I immediately think about like what kind of effect that's gonna have on real estate. Because if people don't actually need to be living close to the office, they don't need to be living in a big city, for example. If you can basically work for Facebook and you don't have to be in San Francisco, you can be in Omaha, Nebraska, you can be in Vietnam, it doesn't matter. It makes it really tough to say that there's gonna be a lot of demand for real estate, especially in some of the bigger cities. Once again, this is just my opinion. I'm just speculating right now. I could be completely wrong, but I'm just telling you my reasoning behind why right now I'm not investing in real estate. So I'm gonna talk about 3 more things I invest in, and all 3 of these things have one thing in common, and that they are all things that are limited in supply. I did mention earlier in the video that governments are just printing money right now, and that is devaluing the currency. And that's why right now it's extremely important to be putting your cash in scarce resources, because at least those things will retain their value even while cash continues to go down. The first thing I want to talk about is precious metals, specifically gold. So last year I had absolutely no money in gold, but this year I now have 5% of my portfolio invested in gold. And there are ways to do that. You can actually buy physical gold and put it in a safety deposit box at your bank. A much simpler way to do it would be to buy gold index funds like GLD, for example. And that's what I do. Historically, stocks and bonds usually outperform gold, but we're in different times right now. In 2020, gold has definitely outperformed termed all stocks. And the main reason why is what I've been saying this whole video, which is that people don't want to be holding cash right now. They would rather hold limited resources such as precious metals like gold. The next thing is cryptocurrencies. Now, a lot of people out there just say, you know, cryptocurrency, that's a scam. I remembered what happened in 2017 when Bitcoin went to 20,000. And a lot of you guys probably bought at that time and lost a lot of money. And now you think crypto is just a big scam. But I'm here to tell you that it's definitely not. In fact, crypto is also something that I had just 0% of my money in last year, and now I have 5% of my entire portfolio, specifically only in Bitcoin. And I could make like 10 videos talking about why. I can make an entire channel talking about why I invest in crypto. But some of the more general reasons are, right now across the world, there's this general trend of lack of trust in government and world banks. Just recently in Lebanon, actually, people woke up one day and the value of their currency had dropped 50% because of some pretty reckless moves that the Lebanese government did. And we've been seeing things like these happening in several countries around the world. Even in the US, we've seen this kind of anger towards the government because of what's happening with, you know, the wealth gap. The rich are getting richer, the poor are getting poorer. The government's printing money, but not a lot of that is actually going towards people who actually need it. There is a lot of distrust towards the government, and cryptocurrencies, in my opinion, offers people an alternative to that. It's not regulated by any government. All transactions are 100% transparent. Like, I know this is a big statement, but like, I actually believe that one day Bitcoin might be the world's reserve currency. I know that's a big statement, and I really don't suggest you guys put 5% of your money in Bitcoin. That's a lot of money to be putting into it. The reason why I do it is because I read a lot about Bitcoin. I read tons of books about it, blogs. Some of you guys might be asking why Bitcoin, why not some of the other ones like Ethereum or Litecoin? The reason for that is network effect. So right now, Bitcoin has a 50% market share of all cryptocurrencies. And in a lot of countries, a lot of stores have started to accept Bitcoin. The more people that trade the currency, the more trust there is in a currency. So that's why I think Bitcoin has the highest chance of actually succeeding as like a world cryptocurrency. But even if you know nothing about cryptocurrencies and you don't have the time to learn about it, I suggest putting just 1%. That's right, just 1% of your money in a cryptocurrency like Bitcoin, because the potential gain from that investment could make up for the losses of the remaining 99% of your portfolio. That's how much Bitcoin could basically go up in price. All right, enough about that. Let me talk about the last thing I invest in, and that is sneakers. That's actually what this channel is all about. That's what you guys know me for. I love sneakers. I love wearing them. I love buying them. A lot of sneakers I buy just to invest. So actually last year, I would say closer to 15% of my money was in sneakers, like just buying and holding. But right now, this year, I've dropped it to around 5%. And the reason why I've reduced the number of sneakers that I invest in, and when I say invest, I mean like buying and holding onto it, is for the same reason why I said I wouldn't invest in Nike stock right now. And that is because we're just in a huge recession right now, and consumer goods always suffer in recessions, and shoes are part of those. And no, I'm not saying that all sneaker prices are gonna come down, but what I am saying is there's not gonna be as much profit to be made in resale as there used to be. And also the speed at which sneaker resale prices go up, it's gonna be a lot slower than it used to be. So that's why right now I've just been quick flipping a lot of sneakers. For example, the Yeezy QNTM Bariums that just dropped. Basically, as soon as I was able to cop it on Adidas, I sold it on StockX pretty much 5 minutes later. I sold it for 380 euros. It was a size 10.5. Right now, I just looked at it this morning. A size 10.5 is 320 euros right now on StockX. So I made basically an extra $60 by selling it early. And yeah, it's very possible that over time, the Yeezy Bariums might go up in price to over 380 euros. But why wait around for that? Right now, I can take those 60 euros that I just made extra and invest it in something else. And as I said earlier, I think that the speed at which sneaker prices are gonna go up are gonna be a lot slower now than they used to. But yeah, right now I just have about 5% of all my money in sneakers that I'm just holding on to. So like, I mean, those are pretty much just Dunks, Jordan 1s. Those are like some pretty safe investments. Besides that, I'm not really looking to buy and hold much. But yeah, those are pretty much all the things I invest in. Let me know down in the comments. Did you guys find this video useful? That's what I want to know. If you found it like too much information, too boring, you can even tell me that in the comments. If you want to see more of this kind of content, of course, that would be the most important thing I want to know. Let me know down in the comments if that is the case. Before you guys begin investing, a book that I really think would be super beneficial for early investors is The Intelligent Investor I will leave a link to that in the description. And also, if you're interested in learning about cryptocurrencies, I suggest reading the Bitcoin Standard. It's pretty much like the Bible about Bitcoin. You learn everything there is to know about that technology. But yeah, don't forget to smash the like button if you found this video useful, and of course, subscribe for more. I will be dropping more of this type of content if you guys enjoyed it. And of course, follow me on Instagram. The handle is right here. It is at JDKick6. Definitely the easiest place to contact me. And thank you guys so much for watching this video. Give me a what up JD if you made it to this part of the video. You guys are the best. Thank you for messing with the channel. And until next time, guys, peace.